Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in and take a look, see what's going on today. If you want to follow me, it's @Finance. And if you want to join our community, finding-value.com is where you want to check it out. I dive deeper into a whole bunch of different things and share that share everything with the community. Uh, you can see the special code in the corner there. Starting this party, let's start with copper. Copper looking absolutely fantastic. He didn't even post anything for any sort of verbiage or anything like that. We're right up against resistance. Um, we've got higher lows coming right into that resistance line. And I think when this thing breaks, it's going to be a big, big move. I haven't talked about copper all that much. I'd say, like a couple weeks to a month ago. But as this has matured into this resistance area and we're about to break through it, things are looking really good for copper. And, I went back and I looked at some of the ratio charts. This is copper in relationship to gold. And if you look at where we're located, right down here in this corner, we're at a really low location for copper being cheap in relationship to gold. And you know how I like my ratios. I like them nice and dirt cheap. And copper is dirt cheap against gold. Last bull market, you can see we had a pretty big move from early 2000s up to 2006 for copper. Very big move. It was a breakout move, in fact. This was a big consolidation. I think we're in a similar situation to that time frame. Dollar's starting to weaken. Copper's right up against resistance, ready to break out. We're at a very cheap copper to gold ratio. And with it squeezing into this corner like this, I mean, we could see an explosive situation really take off here. So this guy breaking out with the ratio where it's located, yeah, copper looks pretty enticing. Canadian Venture CDNX breaks out versus the price of gold. So we're doing a lot of ratios here. Monthly, it's plus 2%. At this point, microcap stocks across all sectors have the green light to climb up a tree. Gold, silver, copper, crypto, lithium, uranium, rare metals, platinum, and more. I think he means rare earth metals and more. So who's up for a melt up as Canadian CDNX just starts to break up and out against gold? I do think copper is going to break out against gold. I think there's going to be a variety of different commodities that just do crazy things here. A lot of it is rooted in the weakness of the dollar. That's where the root of all of these charts are being derived from, in my opinion. So look for outperformance in a variety of different sectors. They all look like they're bottoming for the most part. They're breaking early stage downtrends just like this one. And then we'll see an acceleration of this move. I think it'll be very similar to the early 2000s where the dollar dropped significantly during that time frame. I think it's going to be a similar setup going forward. Gold Ventures, silver is setting up for the greatest breakout in the history of capital markets. Yeah, and I'm going to continue to go over this stuff until it doesn't, guys. Silver is got that 45-year cup and handle pattern. And when this thing starts to lift off and break, we could see the greatest breakout in the history of capital markets. One of. Copper's doing a pretty big pattern. Platinum's broken out of a big pattern. Silver's going to be next. When these things go, all I can say is I hope you're positioned and you're able to just hold on. This isn't a time to get cute. It's not a time to trade the short term. You're sizing up the markets properly. These are the biggest patterns I've ever seen. That also means that you can make the biggest mistakes in your life trying to trade around the biggest patterns. this is a buy and hold, probably for many many years, maybe even decades, where these patterns break. We could get a retest move where we break out to 60, 70, $80, $90 silver. We do a retest back to 50 or something, and then we start the biggest bull market in the history of our lives. Kind of like buying silver in the 1940s. But when I look at all this, everything's lined up across all these different commodities for massive outperformance. We bottomed in 2020. That was the start of the super cycle, and we're going to enter this super cycle here with vengeance. I think within the next couple of months, probably will be the start of what I call wave three, or the third leg. Our energy futures composite is carving out a massive base. It needs more time, but looks very constructive. To me, this is a corrective wave after a historic 500% rally from 2020 to 2022. It's looking increasingly likely that 2026 will be a great year for energy. I agree. 2025 could be still in the bottoming process, but down here, I think is a great location to be looking. In this particular chart, we're looking at the ASC Energy Futures Composite. It's an equal weighted basket of crude oil, heating oil, gasoline, and natural gas. Basically, all of the fossil fuel energies outside of maybe coal. But yeah, this is all shaping up. I look at all the individual equities and the charts. They all have bottoming patterns. So 2025 here, second half will probably be a bottoming phase. We could go up too, but 2026 and 2027, I think that's when it's going to light it up. It's going to light it up. Dear son, it says, the most depressed person in the family is not the mother, not the father, but it's the eldest son of the family. Shout out to all firstborn sons. May your pockets never run dry. Well, I'm a firstborn son, so yeah, I guess I don't think I'm the most depressed, but uh, I just thought I'd read that. Breaking: AI is learning to lie, scheme, and threaten its creators during stress testing scenarios per Fortune. Oh, yeah, I'm kind of curious how AI handles people that threaten it. I wonder if it would learn and adapt and what it would do. I don't know. Seems a little crazy. Here's another one. Copper's catching a significant bid relative to gold at the same level that marked the 2009 and 2020 lows. And again, this is copper versus gold, the ratio. And we're at that support level where it would be good to accumulate. You can also draw a line coming down through here. We're into that corner. I do think that copper is going to break out and move a lot higher. And people say, "Well, what's your price target?" I don't know, guys. I don't do the whole price target thing. I don't sit there and try to project everything. All I'm going to say is this pattern's big. It's been going across for a while. We could easily hit maybe $15 to $30 a pound. And I know that seems crazy right now, but when you look out about a decade, I think that's probably where it will end up. $15 to $30 a pound. It may not stay up at whatever it spikes up to. We may come back to a much higher level, and we spike. We do like a big spike, and then it comes back and goes to a higher level. So if we were to look at copper priced in dollars, and remember that's the dollar falling, consider this to be a price level here. So you get a big spike, and then that lives at a higher price level, and then you'll get a spike, and then this will spike all the way out um, into a much higher level, and we may consolidate at that higher level at some point. So this will break out like this, and then maybe it'll do something like that, or whatever it is, something along the lines of that. So maybe 15, 20, I don't know, something dollars up there. There are ways that you can kind of project depending on what you use to project. So if we were to do a trend-based fib extension, of course I chose retracement on accident. So if this was a part of this cycle, um, yeah, something like, oh, maybe 12 to $15. is probably where it would peak out at, somewhere in there. So probably well over a double in the copper price. But that, again, that's just a extension. It doesn't mean that that's how it will play out. It might go more, might go a little bit less. So, but copper's looking really good, right where it's at. Big booty base in the dry bulk shipping ETF. Correct. Double bottom. Kardashian bottom. I think he maybe got that from me. I always talk about the booty bottom here, and it looks like we're getting the booty base. So yeah, it's a double bottom working its way on up in dry bulk, and that also correlates really well with iron ore and coal. And I think those are also going to do very well. Translation, hyperinflation is inbound. So Fed's Bostic says, I expect a longer period of elevated inflation, but no spikes. And he says hyperinflation is inbound. Here's Peter. It's CO2 did not cause a single one of these dramatic climate shifts from cold to hot and back again. For the past 11,700 years, such changes have taken place for billions of years. CO2 levels in the air, land, and oceans are entirely unrelated to changes in regional weather or climate. As we go up and down over time during these warm periods and cold periods. Right now, we're in a warm period similar to all the rest of the warm periods. And it is no different with CO2 levels. And I don't think that CO2 levels are the root cause of global, quote, warming. It's made up, guys. We've been cycling back and forth the entire time. Chris Martin says, I support this 100%. Replace both income and property taxes with consumption taxes. Then the choice is yours. Buy or save, aka freedom. And it says, Trump, I want no more property taxes across the United States. Neither do I. I hope that something like that would get passed so people can stay in their homes and not get taxed out of them through high inflation or hyperinflation events. But I would agree. I think consumption taxes is where it's at. And I think income and property taxes should be removed. So completely agree. Spencer says, Besant, tariffs could lead to one-time price bump, a one-time inflation bump of 10%. 5 years worth of inflation in one quarter. Let's do it. But if we do eliminate income tax, I would still support tariffs if we eliminate the income tax. And some people, I don't know, some people got really mad over these tariffs. Like if we talk about tariffs, there's people like I was talking about potentially eliminating income taxes and that I would support tariffs, but that's us paying it. Yes, there would be tariffs on a variety of different countries. So it's not impacting the countries that are producing products and selling them in America as much for them, at least. Could they sell a little bit less? Maybe, if they become a little bit less competitive because of the tax. But I want to get rid of income tax. Like that income tax is ridiculous. And we used to not have it back in the day. And if we could go back to not having it, that would be definitely preferable by me. Capital rotation is ongoing. Global currencies breaking out versus the US dollar is a part of that script. I agree. The euro has broken out versus the US dollar as predicted by the falling wedge. And here we are breaking higher. And this is all part of the cycle. It's more evidence that we are entering a commodity boom, weak dollar, and stronger emerging markets and the currencies of those emerging markets. Now, this one is the euro, not really an emerging market, but they all say the same thing. Dollar's weakening against all the other currencies. That is a part of the cycle. It's a marker of where you're at in the cycle. And we're at the beginning of the cycle because they're all just starting to basically break out against the dollar. That is a big deal because it determines money flows. And it also should be a marker for people to get excited, to be like, you know what, I need to continue to pile into cheap investments in these particular areas. So it's a marker of where we're at in the cycle. And right now it is indicating that we're just starting and are early in the cycle here. The bottom being 2020, which was at the ultimate bottom here. That was the bottom of the bottom. This is the first wave, and now we're entering the third wave. Peter says during the last 1 million years, the average glacial cycle lasted 92,900 years, and the average interglacial period was 18,200 years. The interglacial temperature rose on average 13.5 C given global data. The average glacial period, or period of freezing, lasted about 74,700 years from climate optimum to the next glacial maximum. Historic global warming events, and I'm just going over this to give you guys data, but these were all natural, every single one of these big moves. But apparently, this most recent one was all driven by fossil fuels, even though we've had this cycle going on forever. It is not driven by fossil fuels, it's just a cycle. And CO2 levels do go up, and maybe we put more CO2 in the air, but I don't think that the ultimate levels are going to be any different than history. And no, I'm not an expert on this, but I do think they're trying to lie to us. So I'm just throwing this out there so you guys aren't gullible to the lies. Javier Blas says, chart of the day, maximum pressure. Nope, it's maximum oil. The Iranian total liquids output hit a 46-year high in 2024, and more is coming in 2025. Tehran hasn't pumped more than 5 million barrels per day since 1978. The year before the Islamic Revolution ended the rule of Reza Pahlavi, the last Shah. So Iranian total oil output hits 46-year high. It's at 5.5 million barrels. And I'm sure there's reasons behind them letting them pump and sanctions and stuff like that, probably because they want to reduce oil price. It helps from inflationary pressures. Maybe we're peaking in shale oil, and maybe they're like, you know what, we need to just let them produce. Perhaps, I don't know. Can't tell you the exact reason, but there's no energy transition to renewables. Rather than replacing fossil fuels, renewables are adding to the overall energy mix. So they're not really replacing them. They're just adding on top of it. Basically, the world wants as much energy as it can produce. And energy is wealth. So really, wealth is the conversion of commodities and energy put together into usable products. And right now, even though we are trying to increase solar and wind and all these other things, it's not really displacing fossil fuels. It's more or less just adding to it. I think that will continue, and I don't think it will displace it. I think we'll just continue to add to the mix with fossil fuels also being burned at a rapid pace. Grady says, silver still doubting silver can reach almost unimaginable levels? Then ponder that silver's all-time high is not $50 an ounce, it's $806 an ounce. In 1998 USD value, and that is 1,593 today. So using the Fed's massaged inflation calculator and using shadow stats, it should be 4 times that. Silver had been in decline for 500 plus years when it bottomed out around the millennium. The chart shows a 500 plus year black expanding falling wedge, his drawing in there. The false breakout is the 20-year bottoming phase of the cup, of the 45-year cup and handle pattern. Note that silver has just hit $60 just to break out of that black expanding falling wedge. So could $800 happen briefly again when silver goes ballistic towards the end of the bull market? Absolutely. So here is all-time highs of 806. We've been in a black falling wedge ever since that time frame. We had a false breakout, and then we could go all the way back up. Maybe even break out of that falling wedge channel. To break out of that, that might be, $60, $70 to get out of there. I think he says 60. And then we're off to the races. Off to the races. You guys aren't getting it yet, says Calvin. The United States is entering an inflationary death spiral. The decline in the purchasing power of the dollar will accelerate significantly. We don't seem to have the spine to accept temporary deflation for long-term prosperity. The money system isn't designed that way. The Great Marti, ladies and gentlemen, The Buffett indicator has reached 209%, the most overvalued in history, 40% higher than the 2000 bubble. I hope this helps. Most overvalued in terms of stock market in history. Mark Mills, a U.S. physicist, has calculated that you need 20,000 pounds of battery to equal the energy of 1 barrel of oil, which weighs 300 pounds and can be stored in a $10 drum. The green hydrogen scam has almost run its course too. 20,000 pounds of battery to equal 1 barrel of oil, which weighs 300 pounds. That's how much energy content oil has. And that's all I've got for today, guys. So give me a thumb up for the content, subscribe to the channel, subscribe to the website if you like. And that's all I've got for today. So we'll catch you next time. This is Finding Value.